Welcome to Words of Sardon. This is CH. I will be covering the series of Vanguard LifeStrategy Percentage Equity UCITS ETFs in this video, which is part of my Absolutely Biased Comments or ABCs series. There are 4 funds in this series with different asset allocation mixes, but are otherwise similar. The aim of this series is to cover 1 fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up on a viewer's comment in my previous video covering the Janus Henderson Balanced Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. The Vanguard Group was founded by John Bogle in 1975, who worked in Wellington management for about 20 years, honing his investment skills and preferences, before deciding to set up his own company focusing on offering low-cost, broadly diversified indexing solutions to individual investors. While there are various other strong competitors in the market, Vanguard has consistently been known for keeping its costs and enjoys endorsement from the industry. Warren Buffett, for example, in the Berkshire Hathaway 2013 shareholder letter, recommended Vanguard's products, and that helped spur significant investor inflows into Vanguard and the rest of the global ETF industry. Vanguard today manages over $12 trillion of assets globally through over 400 mutual funds and ETFs, of which about half are offered in the US and the rest offered globally. Majority of the products are passive index trackers, although Vanguard also offers some actively managed solutions. Vanguard shares the top ETF provider honor with BlackRock's iShares ETF business, with both of them having about the same ETF AUM in the US market currently. The Vanguard LifeStrategy Fund of Funds methodology is not new. Vanguard first rolled out the LifeStrategy solutions in 1994 as US onshore mutual fund structures. Underlying products are other US onshore funds and US listed ETFs from Vanguard. Naturally, these come available only in US dollars and are meant for US investors only. In 2011, Vanguard launched the LifeStrategy mutual funds in the UK as UK Open-Ended Investment Company Structure or OEIC. Underlying products are other UK domiciled funds and a handful of UCITS ETFs from Vanguard. These are, however, tailored for UK investors, and the portfolios have a high overweight in UK equities and UK bonds. Realizing there are demands for a more normal, non-UK bias solution, Vanguard launched in early 2026 another series of LifeStrategy funds in the UK that are broadly similar to the previous series, but without the overweights in UK exposures. Last but not least, Vanguard also launched the Irish UCITS ETF series in 2020 that I am covering in this video. Underlying products are other UCITS ETFs from Vanguard. Given this series exists as ETFs, they are the easiest to access for global investors. They are currently available for trading in Euro only though, so hopefully Vanguard can launch other trading currencies soon. The Vanguard LifeStrategy Percentage Equity UCITS ETF series are sub-funds under the Vanguard Funds plc fund family. The fund family is set up as an Irish investment company with variable capital or ICVC structure and is UCITS qualified. The ETFs are listed on multiple European stock exchanges but are currently available in Euro trading currency only. There is no mention of any fund manager information for the Vanguard LifeStrategy Percentage Equity UCITS ETF series, except for a brief mention in the ETF webpage that the investment manager is Global Equity Index Management, which I presume is a department name in Vanguard. While the portfolios are all passive ETFs, I thought there should be a specific multi-asset team that is responsible for the allocations in the portfolios, and therefore worth mentioning to investors. Vanguard probably thinks otherwise. The Vanguard LifeStrategy Percentage Equity UCITS ETFs provide an investment objective and some information on the investment strategy in the ETF web pages and fact sheets. The first paragraph, that is the investment objective, have some small differences given the ETFs have different asset allocations. In summary, the ETFs invest in both fixed income and equities, mainly through investing in other collective investment schemes that are funds and ETFs. The fixed income allocation is intended to generate income, while the equity allocation is intended to provide long-term capital appreciation. This is further elaborated in the subsequent paragraphs, whereby the percentage of equity allocation is that as per stated in the ETF name, with the remaining in fixed income. For example, Vanguard LifeStrategy 60% Equity UCITS ETF will have the paragraph here stated as 60% by value of equity securities and 40% by value of fixed income securities, and so on. Here it also defines the underlying funds and ETFs needed to be UCITS compliant and are passive index trackers. Naturally, it would only make sense for this to be Vanguard products as well, unless there is a specific exposure that Vanguard doesn't seem to have a product to represent. Beyond the fixed high-level equity to fixed income allocation, the investment team actually has full discretion on how to allocate the exposures, such as geographic or sector exposures for equities, and credit or maturity or sector exposures for bonds. As such, the ETFs are considered as actively managed solutions. The ETFs are allowed to use derivatives for investment purposes, although we will see later there doesn't seem to be such usage in the portfolios. As mentioned earlier, the ETFs are created with euro-based currency in mind. As such, non-euro currency exposures for the fixed income portion will be hedged to euro. Equity exposures are generally left unhedged, similar to typical equity funds in the market. These paragraphs are pretty detailed and actually replicates a significant portion of the information stated in the prospectus. As a result, there is not too much additional information found in the prospectus, as shown here. There are hardly any investment constraints mentioned, with the only most relevant reference being an expected max 20% in emerging markets debt and non-investment grade debt respectively, though even these are not fixed constraints. There are also hardly any information on the asset allocation and underlying fund selection process, with only a brief mention that the underlying funds are selected based on their relevance as a building block to create the overall global diversified portfolio in accordance to the high-level equity versus bond allocation. It does mention that the underlying exposures and number of underlying funds can change over time, so it seems there is some flexibility on the portfolio construction. Both the Vanguard US and UK websites have dedicated web pages to explain the LifeStrategy solutions, but they are very brief and also contain no information on how the underlying asset allocation is being determined and how the underlying funds and ETFs are being selected. Does Vanguard use a quantitative model or a team of fundamental research analysts? Are there top-down macro considerations to adjust country and sector exposures? Are there assessments on risk correlation effects among the underlying funds during selection? Unfortunately, this currently looks like a complete black box until Vanguard decides to provide more details one day. The Vanguard LifeStrategy Percentage Equity UCITS ETFs were all incepted in December 2020, giving them over 5 years of track record now. Given they are multi-asset strategies and are currently tradable only in euro, investor interests have been quite mixed. We can see from the AUM that the ones with higher equity exposures are getting more investors' monies, with the 80% equity version the highest at 1.28 billion euro, followed by the 60% equity version at 1.05 billion euro. In contrast, the 40% equity version has only 281 million euro, and the 20% equity version has the lowest at 116 million euro, suggesting fixed income biased investors may simply be going for pure bond solutions instead. Vanguard doesn't provide much portfolio details in the ETF web pages and fact sheets. For each ETF, the webpage only shows the high-level equity versus bond allocation, as well as the allocation percentage to each underlying Vanguard ETFs. It is rather difficult for investors to try figure out their portfolio exposures by just glancing at this information. To try and make better sense of the ETFs, I have extracted the data from the web pages of the 4 ETFs and consolidated them here. There are currently a total of 14 different Vanguard UCITS ETFs that are used as underlying investments in the portfolios. We can see the 4 ETFs are keeping very close to the high-level equity versus bond allocation. There are very small drifts of less than 1%, probably due to market movements, suggesting that this high-level allocation is being maintained on a daily basis. Number of holdings at see-through level are all about 24,000 to 25,000, so the specific stocks and bonds exposures are more or less the same, just that the allocations are different. Looking at the underlying allocations here, we can see there are two main building blocks being used. The FTSE All-World UCITS ETF is used to represent global equities, and the Global Aggregate Bond UCITS ETF is used to represent global bonds. We also see that none of the underlying allocations exceed 20%, because this is a UCITS rule that the ETF needs to abide by. Interestingly, the additional ETFs seem to be used only because of the 20% UCITS rule, and for topping up to the same exposures. For example, the 40% equity ETF needs 40% total allocation to global equities. It can, however, at most allocate only 20% to FTSE All-World UCITS ETF. Therefore, it allocates about 18% to FTSE Developed World UCITS ETF and 2% to FTSE Emerging Markets ETF. There seems to be no attempt to take a bias in any geographic or sector or style. The same goes with the bond exposures. When the mandate requires more than 20% in global bonds, the ETFs add on US dollar and euro sovereign and corporate bond ETFs in a proportion that mimics the Global Aggregate Bond UCITS ETF. From the very small allocations that are less than 1%, we can also deduce that the asset allocation process is likely done via a systematic or quantitative model with no need of human intervention. In summary, the LifeStrategy series of ETFs would probably just allocate to only the FTSE All-World UCITS ETF and Global Aggregate Bond UCITS ETF if there is no UCITS rule to cap underlying funds at 20% allocation. Since Vanguard doesn't provide more portfolio information, let's refer to Morningstar for details. Here, we can see the equity breakdown looks nearly the same across the LifeStrategy series, essentially mimicking the Vanguard FTSE All-World UCITS ETF that has about 3,800 large and mid-cap stocks globally, of which about 90% are developed country exposures and 10% emerging country exposures. Bond breakdown looks broadly similar as well across the LifeStrategy series, with the exception that there are slightly more securitized assets exposure in the 60% and 80% ETFs, probably because these are part of the underlying Global Aggregate Bond UCITS ETF exposure, and Vanguard doesn't have an underlying securitized assets UCITS ETF to fill in for the 20% and 40% ETFs. So after going through the portfolio details, we now understand the asset allocation process of the LifeStrategy series seem to be done through a simple systematic process that rebalances the allocations on a daily basis, and the exposures are being maintained in accordance to the Vanguard FTSE All-World UCITS ETF and Vanguard Global Aggregate Bond UCITS ETF where possible. This means the only practical reason to invest in the LifeStrategy UCITS ETF instead of the two main underlying ETFs is to pay Vanguard to maintain and rebalance the equity to bond allocations on a daily basis. As mentioned earlier, the Vanguard LifeStrategy Percentage Equity UCITS ETFs are available only in Euro currently. It should be quite easy for Vanguard to create more tradable currencies such as US dollar unhedged in this ETF structure, if they want to. Each of the ETFs do come with an accumulation class and a semi-annual distribution class. All the share classes were incepted on the same day in December 2020. Since these are ETFs, investors also do not have to worry about different investor share class types like typical mutual funds. These are all the standard share classes available for everyone, and they have the same total expense ratio or TER of 0.25%. While this looks to be a competitive fee structure for what is labeled as an actively managed multi-asset solution, I would have expected Vanguard to do more than just a simple systematic model to asset allocate and rebalance the portfolio daily. The ETFs are currently listed on 3 European stock exchanges, each with their unique identifiers. Vanguard doesn't provide trading statistics though, so we do not know how much the premium discount gaps have been for the ETFs. Distribution history of the distributing share classes of the Vanguard LifeStrategy Percentage Equity UCITS ETFs are available in the respective web pages. The 20% equity ETF currently has a 3.55% per annum distribution yield, while the 80% equity ETF has 1.9%. The distribution yields have changed quite significantly over the years, and looks to be broadly in line with the interest rate movements in US and Europe combined. This suggests the ETFs are probably paying out all the coupon yields received through the underlying bond ETFs, with no intention to provide any smoothened payouts. Investors who are looking for a stable income stream will have to take note of this. Given the 20% equity and 40% equity versions have large allocations in bonds and bond yields are the main contributors to the overall returns, having the bond yields paid out as distributions mean that there is little growth prospects for the NAV. Here, we can see a since inception Morningstar chart of the 20% equity ETF NAV versus total return, where we can see the bulk of the returns being converted to distributions and the NAV sees minimal improvements. It would be tough to expect the ETF recover its NAV from a market correction such as 2022, when both equities and bonds were impacted. In contrast, the 60% equity and 80% equity versions have more equity exposures and therefore have better NAV growth potentials. Despite having lower distribution yields, the distributions in absolute dollar terms can be quite decent over time in a bullish market environment because the overall return of the ETFs have been much higher. This may be one of the reasons why the higher equity allocations ETF have had much better success getting investors' monies than the lower equity allocation ETFs. One thing I like about Vanguard is that the calendar year returns data in the ETF web pages actually shows the attribution breakdown of NAV and distribution payout. This gives a clearer picture to investors on how the total returns are derived and what investors really get when they opt for the distribution share classes instead of accumulation share classes of the ETFs. I don't think I have seen this data from any other fund providers. The Vanguard LifeStrategy Percentage Equity UCITS ETFs have quite a variety of performance data available in the ETF web pages. Besides the usual calendar year and various time period annualized returns, Vanguard also provides monthly and quarterly performance data points that are seldom found in products from other fund providers. As mentioned earlier, I also particularly like the capital versus income performance breakdown in the calendar year table, which I have not seen from any other fund providers. To make it easier to compare, I have extracted the calendar year and time period annualized returns of the 4 ETFs, plus the Vanguard Global Aggregate Bond UCITS ETF Euro returns from the respective Vanguard web pages. The Vanguard FTSE All World UCITS ETF doesn't have Euro returns data in its web page. so I obtained them from Morningstar instead. Equity markets represented by FTSE All World have been doing very well in the past 5 years, while bond markets represented by Global Aggregate Bond have been lackluster. The lack of emerging markets bonds and high-yield bonds also limits upside opportunities in the bond space. As a result, we see the returns for the 20% and 40% equity UCITS ETFs have been rather unattractive and therefore have had a much poorer AUM growth. With the returns data of the Global Aggregate Bond UCITS ETF and FTSE All World UCITS ETF, we can also run an exercise to see how effective the asset allocation methodology of the LifeStrategy series have been. For example, we can use the calendar year returns to multiply against the broad equity to bond allocation to assume that we are manually rebalancing the allocations every year end. While this is only a 5-year period, the results are a bit surprising, as it shows that the LifeStrategy series have been generally worse off than this manual approach. This could be that the daily rebalancing isn't working out as well as yearly rebalancing for these ETFs, or that the LifeStrategy series is charging slightly higher TER than the two individual ETFs. Regardless, it does mean that Vanguard probably needs to put in some effort to improve the LifeStrategy's asset allocation and investment approach in order to generate better returns. Otherwise, there seems to be no strong benefits for investors to move from the manual approach to LifeStrategy. Let's run some performance comparisons using Morningstar charts. Here is a since inception chart of the LifeStrategy series together with Vanguard Global Aggregate Bond UCITS ETF and Vanguard FTSE All World UCITS ETF, showing a very even spread of return lines as intended by the design of the LifeStrategy series. We can also see here how uninspiring Global Aggregate Bond has been versus how much FTSE All World has gone up in this time period. There are not many fund providers offering a full range of fixed asset allocation solutions in Euro terms, so I'll use the Dimensional World Allocation Fund series that I covered in another video recently. There are obviously product differences, as Dimensional runs a more active multi-factor systematic approach that allocates to a broader universe in both equity and bond aspects. But to general investors, I suppose the important thing is which product can ultimately deliver better returns. Here are the 20% and 40% equity solutions for both Vanguard LifeStrategy and Dimensional World Allocation. It is clear in the chart that Dimensional did a much better job handling market drawdowns in 2022, as its funds were more exposed to lower maturity bonds. Post-2022, however, has been a different story. For the 20% equity solution, both Dimensional and Vanguard have delivered similar returns, but Dimensional wins with a much lower volatility track record. For the 40% equity solutions, Vanguard actually delivered slightly better returns than Dimensional for this time period. The situation is similar with the 60% and 80% equity solutions, with Dimensional doing a better job handling market drawdowns in 2022, but Vanguard managed to recover in 2023 and 2024. As such, the performance of the products through this time period have not been significantly different. With that, let's summarize our findings. Founded by John Bogle, Vanguard is a US-based asset manager best known for offering low-cost indexing funds and ETFs. It is one of the largest ETF provider globally, with over $12 trillion of AUM. The Vanguard LifeStrategy Percentage Equity UCITS ETF series comprise of 4 fixed target allocation multi-asset solutions, with a mix of 20-80, 40-60, 60-40, and 80-20 mix of global equity versus global fixed income. Underlying exposures are other Vanguard UCITS ETFs to keep the proposition straightforward. While there isn't much information available on the asset allocation process, the findings seem to indicate that LifeStrategy is a simplistic systematic model that allocates primarily to Vanguard Global Aggregate Bond UCITS ETF for global bond exposure, and Vanguard FTSE All World UCITS ETF for global equity exposure. These are the two key exposures of the LifeStrategy solutions. Given there is a UCITS rule to cap 20% allocation to the underlying ETFs, the model then adds on additional ETFs with the intent to just replicate the two key exposures until the high-level equity versus bond allocation is achieved. The main purpose of the LifeStrategy solutions is therefore to obtain daily rebalancing of the high-level equity versus bond allocation, which is, however, both a good and bad thing. The good is that daily rebalancing obviously minimizes style drift and allocation drift for investors who have such concerns. The bad thing is daily rebalancing does not necessarily translate to better returns. As shown in the calendar year calculations, manually allocating to the two key underlying ETFs and doing a yearly rebalancing has actually translated to slightly better returns than the LifeStrategy solutions. This ETF series has been running for more than 5 years, but currently are tradable only in euro terms. They do have accumulation and distributing share classes though to cater for different investors' requirements. Given the asset allocation model and underlying exposures are rather simplistic, the performance of the LifeStrategy solutions have been mixed. Market drawdowns are especially problematic because the model will not de-risk or diversify to other exposures beyond that represented by the two key underlying ETFs. Recovery after the drawdowns, however, have been decent, so long-term performance is still relatively okay. In conclusion, the Vanguard LifeStrategy Percentage Equity UCITS ETF series is really a set of 4 ETFs with simplistic fixed allocation models to global aggregate bond plus FTSE All World exposures, and with daily rebalancing. Investors who are looking for a more dynamic or actively managed asset allocation process or exposures beyond these two key underlying ETFs may not find the LifeStrategy solutions appealing enough. These ETFs are also currently available in Euro only, which will deter non-Euro investors. This concludes my absolutely biased comments on the series of Vanguard LifeStrategy Percentage Equity UCITS ETFs, and I hope it will help in your investment journey. May we all grow wiser and prosper.